Good morning, Jags. This is Fahad. Today is Tuesday, May 26th. Good morning, gang. How's everyone doing?
Good morning, Fahad.
Morning.
We're doing well. Well deserved a little rest. Very hot over the weekend and just west of Toronto. How was your weather down there in Michigan?
It was great. I spent 2.5 days in the swimming pool. It was 85 degrees. It was hot, actually. Yesterday was very hot. It felt like 90 degrees, but it was awesome. I
Yeah,
had
very
some,
humid.
yeah. We got the best out of it. Lots of barbecue and stuff, so it was great. Okay. Let's get started. So the S&P futures are trading above the 200-day moving average that we have been talking about. Also above the major VOP levels that we have at 3,000. Should the index hold these gains as the day goes by, and then continue to see the follow through tonight as well, when the market closes today, so we don't get basically a 1-day breakout that turns into a fail breakout and then we roll over. So should these futures hold, I think that the bulls are going to look at this and they're going to get excited about this. And I think that some of the rally is going to move into more cyclical and the most distressed parts of the market, many of which are in Russell 2000. They're in industrial, they're in transportation, they're in the energy sector, and away from NASDAQ, basically. And that's the case I've been making for quite some time, that the rally needs to broaden out for investors to have conviction that we're going to continue to rally higher. So we need to see participation increase. Globally, 2,200 stocks out of 3,300 stocks are still down more than 20% year to date. So they are still in bear market territory. Many of them are fairly large, about 75-80% of them are trading below the 200 days. So the rally needs to broaden out if we're going to have conviction of continued strength in the market. And that means energy, industrials, transportation, Russell 2000 index, and many of those depressed sectors, not just tech. We'll see if that's what we're going to see all day as the day goes by. So I don't have anything more to add to this than this. Now, moving on, my eyes today are on travel sector. A few things I want to point out. First of all, go on Friday in the chat room, we pointed this out, that we were seeing sudden sharp surge in airline stocks. As you may remember, that around 11:12 a.m. we saw huge call buying in airline stocks. And then first they came after Southwest Airline and they bought 10,000 of those June 28 calls for 250, and then they bought 7,000 of September 35 calls. And we showed this chart right here, as it had already broken out from the downtrending resistance, but it was pulling back because of Hong Kong concerns a little bit on Friday. And then similarly, then we saw in Delta Airlines on Friday, buyers of 10,000 of June 22 calls. Now, both of these activities went off within the minutes of each other. Millions and millions of dollars of bullish bet in these two airlines particularly. And I mentioned at that time that if there is going to be a rally in the travel sector, I believe it was one of the clients that asked me the question that, okay, so if we're gonna basically make a bet or follow along with one of these activities, which one would I pick right now? And I mentioned that if there's going to be a one, I would rather go with Southwest Airlines, simply because of the fact that it is more domestic focused and it is based off of the states like Texas and Southwest, where things have opened up far quicker than New York, let's say, or other states. So if there's going to be a rebound in the total travel throughput, particularly domestically from TSHX, Southwest would be the one. So right here, I said, if I must bet on one of these two airlines, I would love to go with the Southwest Airlines. And here's the trend that we showed, that on each day we were seeing improving throughput. Now, why do I bring up all of this? I bring this up because guess what? Here is a Market Watch article that was published at 6:37 a.m. and take a look at this. Airline stocks soar on signs of travel resumption, recovery hopes. One of the ETFs for airline stocks is called JETS. And if you look at JETS in pre-market, that's all of the airlines. Oops. and this thing is surging more than 8% in pre-market. And similarly, if you look at Southwest Airlines, LUV, this thing is up 7.5% in pre-market. You can go down the list. Here's United Airlines with a big gap higher taking place, also up 7%. Here's American Airlines also gapping higher, 7%. If you actually look what happened in Europe overnight, you will find out that's where the biggest of the gains came from. Lufthansa is supposedly having some better negotiation with the German government to get the bailout packages. On top of it, there's a lot of optimism returning that the travel is going to come back in Europe. So that's where the rally started, and now it's continuing into the United States. So now, staying on this topic, if we are going to see improving trends in the travel, then the question becomes, should that also translate into green shoots for casino stocks in Las Vegas? Now, before I get into the casino stocks, one of the things that we have noticed, for example, last week throughout, we saw a huge response to El Dorado resorts. And Avo, you discussed this one as well, where the breakouts, when they happen on high volume, on just mere discussion that some of these casinos are going to start opening up, the regional casinos, they broke out sharply and they continued to power higher every single day. Right. And so we saw all week long rally in El Dorado resorts going after a breakout through $25 per share, went straight to 33. On a percentage basis, that's a 30% move. Then we saw same thing with Penn National Gaming. Take a look at this breakout. After it broke out from this, it just kept marching higher. It went up 50% in 7 sessions. So the response to some of these names that were shut down, but as soon as investors started to sniff out that they will start to reopen even at a lower capacity, the response rate has been huge on the stock price. You can see it went from 20 to 30 in the matter of 6 sessions, 5 or 6 sessions. So there is Penn. Now, I bring this up because Wynn Resorts has not broken out like this. In fact, the last 2 days, Thursday and Friday of last week, they were actually down. Why? Because they have huge exposure to Macau, and we saw increasing tension between U.S. and China because of the Huawei news, as well as the Hong Kong protest and the integration of Hong Kong that China is asking for. So Macau is still struggling a little bit. Similarly, if you go to Las Vegas Sands, it was down also, in MGM the same way. Now, I bring this up because there is this news out from Las Vegas Review Journal 2 days ago. This was published, I believe it was on Saturday or Sunday. Sunday, actually, it was published. And this is the same exact thing. They have actually set the date for reopening on June 4th. The Las Vegas Nevada Gaming Board Control announced that we are preliminarily setting dates for reopening all the properties on June 4th. Now, what's going to happen, according to this article, is that they're going to actually first announce the date, which is June 4th, and all of these casinos by then have to release their plans of how they're going to go about opening the state, which will comply the guidelines that the Nevada Gaming Board as well as the state of Las Vegas is issuing. Then they will have 2 weeks after June 4th to work around the fine prints of, how the casinos want to open and how the regulatory bodies want them to open. And once they've sorted out their differences, then they'll be allowed to open sometime by middle of June or by late of June. And so there's a lot of other information in this article as well. But if I am seeing the way these regional casinos responded, here's Boyd Gaming 2, which broke out last week as well, Penn and ERI and such, maybe there is now a trade to be made on Wynn Resorts for similar kind of breakout, especially if the travel is also starting to pick up from the TSA checkpoints and such. So Wynn Resorts was down from $88 to $78 in 2 days last week. So this thing has not run yet. Similarly, Las Vegas Sands was down after touching 51, down to 46 on Thursday and Friday last week. This one has not run yet. So this is the group that I'm watching, especially if the travel stocks and casinos are coming back. And on top of it, I'm also watching whether we're going to see some follow through to some of these airlines that saw huge call buying, Southwest Airlines being in particular. Even if it gaps higher, let's say 7%, it closed at 28 and 87 and opens up at 31 and change. there could still be reason to believe that this could still power higher, go all the way up to 35 to 36 in the short term, the way we have seen how the sentiment quickly, drastically changes. So we'll be watching airlines, and I'll be watching these big casinos. That's it from me. Avo, you go next. What do you have on your plate?
I have a stock, but it's more of a longer term view, not a short term. At least I don't think it is. Company's called URGN, URGN, and it's a biotech stock that I spotted some options buying last week. Let me just quickly bring this up. I think it was a November bull risk reversal. Yeah, November 25.35 call spread and 22.5 puts were sold to open for, I think it was just a bit of a net credit in the end. Okay, so what happened was back in April, the company got April 15th, FDA approved UGN 101, their lead or their first product rather, for it was fast track, and it's a breakthrough approval for urothelial carcinoma. So it's a rare type of cancer that occurs on the linings of the kidneys and the uterus. It only has about 6,000 or 7,000 patients in the U.S. on a yearly basis, but presently the only type of cure or treatment is surgery. And most of the time when you do these surgeries, it affects the kidneys, and sometimes the kidneys are actually become non-functional after that. So this is actually a non-surgical gel cancer treatment that could open up to very good earnings for this company. The studies returned very good complete responses and durability after a whole year. So just quickly summing this up, it looks pretty good to me. And early adaptation, it's only going to be launched on June 1st, but early word from doctors appears to be very positive, that they would be very willing to adopt this, especially since it doesn't require surgeries. And they also have a second product they're working on. Now, this won't be released, or this won't be finalized for another year or so, but so far early phase 2 data shows that it's pretty good, and it's a similar product for bladder cancer, a type of bladder cancer that doesn't involve the muscles. So I think I was just reading some information last night, and by the looks of it, it appears that the consensus is not really pricing a lot of uptake in usage in the immediate future. So it's going to be interesting to see how it goes from June 1st. In regards to COVID-19 related delays, I looked at the company's press conference from their earnings on May 7th. So it only goes back 3 weeks. So it should be still pretty accurate. And they don't see any delays with COVID-19 related to, patient.
So this thing is the first candidate that you discussed is actually already FDA approved, and the launch is in June.
June 1st, yes.
Okay, and I see your point. They did throughout last week. They sold 500 of these November 22.5 puts. They were sold for about $4.31. Looking at the last price that they collected for it. And then they used the proceeds to buy the November 25.35. Some of this was
spread.
the call spread, but some of this was also bought at November 20, November 20.35, and then some mostly was done as November 25.35 call spread, basically to finance. And also looking at this open interest in the August 25 puts, this was also sold to open. So bullish bias, clearly. It's only a $550 million biotech that, frankly, up until you brought it up today, I had never heard of it. So this will be interesting to watch. Technically, this is a very critical resistance level, both the downtrending resistance and the VOP, but there's an air pocket above it if it starts to break out all the way up to 29.20. So from 25.40 to 29.20, that's pretty, that's what, 15% move to the upside that could be had. on a
The treatment
breakout.
itself, yeah, the treatment itself is right around $21,000 for a session, and I think if you, I mean, even if you do 30% of the 7,000 patients, that's still a big income. Just like some quick calculations were showing possibility of this being a billion-dollar product for the company a few years from now. So yeah,
Yeah,
going
and
from zero income to $1 billion, it's not a bad deal.
interesting. And by the way, just to quickly change the gear regarding another biotech, did you guys see the price action in pre-market and
Yeah, I did see
Arginex?
that. Huge
Man,
gain.
I mean, look at this thing is opening above 200. It sucks because we had those make call options that did not work for us, and then the data comes out, and then boom. I mean, monster gap higher is happening in pre-market. Avo and I worked on this for quite a bit, studying the clinical trials, studying the history, and all of this, and here it is now trading above 200. Anyways, Jay, what do you have?
Yeah, so want to quickly touch on Teladoc,
Yeah,
a name that needs no introduction.
yep,
B of A is out with a note today where they basically comb through ton of earnings calls, this earnings season, and basically saying over the past month, more than 230 companies mentioned either telehealth, telemedicine, or virtual care on their call. And of those, there were at least 150 in the healthcare space alone. And even more noteworthy was the focus on telemedicine by healthcare companies outside of your traditional services. So your medical device manufacturers, your drug companies, your CROs. They then gave a few examples such as Dexcom, Tandem, Insulet. Pre-COVID, diabetes patients that would start on any sort of pump therapy would be trained by a sales rep or a doctor in a healthcare facility. But now, more recently, these companies are, have some sort of partnership and are now using telehealth consultations and virtual training for any new users. And they're also implementing software where your real-time patient data can be uploaded into the cloud so the doctors can utilize that during a remote visit. And then lastly, Exact Sciences, another example, they announced back in April that it would begin patient education with its Cologuard through a number of telehealth providers. So basically, long story short, B of A says, we believe the shift of diabetes care and cancer screening to telemedicine is a positive for Teladoc. So, long-term positive. Short-term, if you look at the technicals, I know the last chart that you posted for Teladoc was on May 14th, and basically showing that trendline support is still there at 170.
yeah, and I adjusted that trend support just a little bit. You have to give yourself a little bit room, because one could argue that there was a technical breakdown last week, but there was no volume behind this, and then immediately it started to form a base. And then so it's still actually higher highs and higher lows. The double top worries me a little bit on this one, so we have to see if it can still move higher and at least go back to retest the 190 to 195 level. From a technical level, basically now you have a very, very good reference point, which is, let's just call it 169, because that's where the basing has been taking place. So one could go long here at 174 even and just put a hard stop at 169, risking very, very little, while making a bet that this thing will run back again to 190 to 200 level, essentially retest the high. So, and that's a very good view. And what I will just add one more thing. Maybe something you can take a look at it later. Cigna reported earnings this morning. And one of the things that has been standing out in all of these health insurance companies, not reported earnings, Cigna provided an update this morning, and I think those transcripts should be available somewhere. I wonder if Cigna is saying something once again related to the usage of the telehealth services and what they're seeing, at their end. United Health was very, very constructive on the industry when United Health provided similar update not too long ago. I believe it was just last week, and we have been pointing out that this chart sets up for a breakout. I wonder if Cigna has anything to say about telehealth services in general. Great stuff from JP Morgan. And this has been our favorite for a long time. So we'll keep an eye on it for another leg higher. Good stuff. Chronicle, you go next.
Yeah, a brief follow-up to my bank OZK report,
Yeah.
which is almost ready. Several things caught my attention. Firstly, there was a land and buildings paper that was out last week, which talked about how the New York office market has been facing some pretty strong headwinds even before COVID-19, where we've basically had too many new office developments and not enough incremental demand to match. As you can see in one of the charts I shared in our private chat, where according to Cushman and Wakefield, Manhattan office vacancy has already been steadily increasing since 2018, while office rents have supposedly been flat since 2015. Additionally, that paper also mentions about how a significant portion.
Chronicle, is it this one? I have 3 charts you sent to me.
It was this one.
It was this one? Okay.
Yeah.
Yeah.
And in the other chart that I shared, we can also see population growth in New York City turning negative several years ago, and just keeps accelerating to the downside. I think COVID-19 work from home policies will only serve to intensify this outflow. We also have to take into account firms reducing their headcounts as well as cost cutting. So the overall picture for office real estate is not good. The current Manhattan vacancy rate is 11.3%, while Moody's is now forecasting that the national office vacancy rate, so nationwide, will rise to 20% by 2021. With rents in
wow. Well, so wait, this chart at the highest it ever goes, it's been to in prior recession has been 12% and change. You're telling me that New York City is going to have more than 20% of its commercial properties empty by 2021?
That's nationwide, Moody's.
Oh, I see. Okay.
But with rents in New York City expected to plunge about 25%. So this is specifically New York City. I think this also has implications for multifamily residential demand if work from home continues. I mention all this because 32% of Bank OZK's loan book is exposed to New York City, while category-wise, offices, multifamily, and hotels make up just over 50% of all loans. The other thing is regarding provisions for credit losses. So I was also going over the latest Federal Reserve's banking stress test and couldn't help but notice that under their worst case scenario, which is supposedly 10% unemployment, near-term rates at 0, plus asset deflation. So from their tests, they found that banks would only have set aside 37% of what would be needed under that worst case scenario. This implies that loan losses could potentially be triple of current provision levels that have been reported. So there's that too. So in short, if money is going to rotate, I don't think it rotates to this space.
Yeah, and this is some really good stuff here because the underlying risk remains, and the calculation continues to suggest in many different ways that the pressure, even as we come out from this crisis with gradual reopenings, I think that nobody is going to deny the simple fact that some permanent shift is going to take place for the work from home crowd, which will not quickly return back to work, because if they're able to accomplish and maintain the productivity, same level of productivity working from home, then there is indeed the case to be made that a permanent pressure will stay on the commercial REITs for a while. And this now brings back in CBRE logic also into play, in which Jay presented the weekend research bearish case a couple of weeks ago. And then initially the trade worked out beautifully as the stock crashed quickly from 42 straight down to 30, 32, 33, and recently has bounced back. So now potentially I'm going to be looking at this one again. And I'm looking forward to what your article on Bank of Ozark, OZK, see what you see, your added thoughts on that one as well. But do you agree that generally the larger view will stay with these with the commercial REIT, the bearish case, that there's going to continue to be pressure on this one? Some people will adjust to new realities working from home, and then they'll be permanently told to just continue to perform at that level. In fact, I've seen Google, Twitter, Facebook, and many other companies have already set that in their corporate policy guidance, that go ahead, you can just now continue to work from home, don't ever need to come to the office.
Yeah, I'm seeing similar headlines from other big companies like MasterCard and Uber too.
Yeah, so it'll be interesting to watch how this industry evolves from here. SPG is another name that has performed so terribly. We'll be keeping an eye on a lot of stocks. Okay, thank you, gang. This was awesome. Good stuff. And thank you, everybody, for joining. I will see you in the chat room shortly.